Let's go straight to the top story at this hour. Cognizant has reported its fourth quarter revenue of $1.95 billion, beating its own guidance. Full year revenue at $7.35 billion is also in line with the company's own estimates. Joining us now to take us through the quarter gone by and the road ahead is R. Chandrasekaran, Group CEO, Tech and Operations at Cognizant. Mr. Chandrasekaran, appreciate you joining us here on CNBC TV 18 and congratulations on another good set of numbers. Let me start by asking you about the commentary that you've held out. And, what we've seen from TCS seems to be a little more bullish in terms of the cautious guidance and the cautious commentary that we've heard from all the others. You've guided for at least, and you're saying at least a 17% growth for CY13. What are you basing this confidence and optimism on? And what's the outlook like from clients in terms of budgets? Have you actually seen an increase in budgets from your clients?
Yeah, basically, Shireen, we feel pretty good about the demand environment. The sense of optimism comes from several factors. If I really look at the way 2012 turned out to be, it exactly turned out to be the way we wanted. Our customer satisfaction is on an all-time high in the last 4 years. And, as we have seen in one of the independent reports from Europe, KPMG has ranked us #1 in terms of customer satisfaction and relationship. The investment that we have made in all the service lines is really helping us gain significant market share and mind share across all our client engagements. The Horizon 1 services, which is application outsourcing, really helps our customers in terms of getting better cost optimization and helping our customers run better. And the focus that we have on Horizon 2, which is BPO, infrastructure services and consulting, it's really giving us significant market share within all the client engagements and really helping customers run differently. And the focus that we have on Mac technologies.
Sure. Yeah. I get that. But to my point in terms of client budgets, are you actually seeing an uptick? What is the situation? Because you've guided much higher than what the street was expecting. The street was expecting 10 to 12%. You've guided 17 plus.
No, actually, the customer budgets are getting frozen, and it's turning out to be the way we wanted. It's pretty flat to slight uptick, and we expect the offshore spend to grow significantly because the customers want to run better and run different, and that's where the investment that we have made in the capabilities that we take to our client engagements are making a significant difference to get us a lot of business traction in all the engagements and also win new customers. And that's why we feel pretty good about the demand outlook for our services in 2013.
You talked about new customers. Where are you seeing these new customers coming in from? And can you give us a sense of the size of these new acquisitions, client acquisitions?
Yeah, actually we are seeing good new client additions in all the industry segments that we service. And we have converted almost 6 customers into the strategic bucket in the last quarter. So the total number of strategic customers, where the revenue potential is anywhere between 5 to 50 million, has gone up to about 214. And, we have won significant number of transformation deals in Europe. We have publicly announced the transformation deals with Philips, Rabobank, and, all these things are expected to ramp up in 2013. So we feel pretty good about the significant wins that we have announced, from all the geographies.
Do you see a significant... do you see a significant ramp up in the transformational sort of deals as well?
Yeah, definitely. The deal sizes are increasing and, it's not just a traditional cost optimization. Really, customers are wanting us to make a business impact through our services, and that's why we are focusing a lot on transformation type of deals, bringing multiple service lines, offering a very unique value proposition. And so that's why, we are able to gain significant market share, and through consulting, we are able to win the mind share of the customers as well.
You've also said that 90 million of the CY13 guided revenue is likely to come from anticipated acquisitions, which pretty much means that you have zeroed in on potential target companies. Can you shed some light on, what kind of acquisitions we are likely to see, when you're going to close this anticipated acquisition or acquisitions, and, the size of these acquisitions, because I would imagine it would be in the ballpark of that 150 million to 200 million size.
Okay. The 90 million out of the 8.6 million that we have guided to in 2013 is going to come through the 2 acquisitions that we have already publicly announced. One is the medical which is the U.S. Healthcare services company with a significant presence in Philippines. We have already closed the deal. It actually closed towards the late fourth quarter of 2012. So we expect about 15 million revenue to kick in during 2013. The other one, C1 group of companies out of Germany and Switzerland, that is yet to close. We expect that to close late Q1 2013. So we expect about 77 million revenue from the C1 group of companies that we acquired, we announced recently. So together about 90 million. And that's what we have baked in our revenue guidance of 8.6 billion for 2013.
Are you going to be aggressively scouting for new acquisitions?
We are always on the market looking out for good acquisition possibilities. As our acquisition strategy has not changed. It's really to fill some of the gaps that we have in our service lines. It really helps us to penetrate newer geographies. The one that we announced, C1, which is really going to help us get a lot more traction in continental Europe, particularly in Germany and Switzerland, and look for some consulting type of skills where we can move up the value chain. So that has always been the acquisition strategy, and that has not changed.
All right, before I let you go, if you can quickly give us a snapshot in terms of pricing, volume growth, as well as margins.
The pricing has been stable last quarter, and that's what we expect going into 2013 as well. And so given the stable pricing and very little movement in the FX, so bulk of the growth that we announced, almost 2.3% growth last quarter, we announced sequential growth, is all volume growth. So we expect that to continue in 2013 as well.
All right, Mr. Chandrasekhar, we'll have to leave it there. Once again, thanks very much for joining us, and congratulations on another good set of numbers. So that's Cognizant beating the street's estimates and holding out a very positive guidance. Staying with earnings, now some major ACC's profits